Hi guys, welcome to my channel. My name is Hugo. Today we're going to see what's happening with eToro increased fees with the CFDs and the ETFs, and also we're going to see what's going to be the best stocks for this week and what's happening in the market and crypto. So stay around. As you heard, the fees on eToro has increased regarding CFDs and ETFs. I've tried to reach the eToro to understand a little bit more what's going on and what this increase will impact on my copies and you as well. So I'm going to do here a resume of what's going to happen. Based on the information that is on the website of eToro, we had an increase from 0.09% to 0.15%, as you guys can see here, where previously is going to be 0.9. And this is going to take effect on the 12th of September. And the CFD's positions, which the majority, since we are in myself, I'm in Europe, I can't buy some of the ETFs on the American Stock Exchange. Therefore, they are as a CFD. So most of my ETFs, and this represents my entire portfolio, represents around 32% of my entire portfolio, are ETFs, which some of them are CFDs. They have increased costs of 0.15 in every single transaction that I do buy or sell. Fortunately, we don't going to have overnight fees, which is good, meaning that the stocks that I have at the moment, I don't have any cost unless if I sell, and I can still continue to receive the dividends. And the second thing here that I was trying to check as well was to see if this €3, what this means. So this €3 price is only on the act of sale. So if you have ETFs or CFDs on your portfolio that are below $3, they incur into 2 cents cost instead of the 0.15. So actually the cost here is much higher. So I went to eToro and I tried to get more information regarding this and see if there occurs any night fees. That is the more important thing for me, which usually happens when you do leverage. But in my case, I don't do leverage, so that doesn't happen. I don't have overnight fees. So I'm going with that. So I've sent an email to my account manager in order to get more information regarding the night fees, which this wasn't explained on the website. And she only replied me with information regarding the $3 of stocks. One of the things that happen is, so for example, in the case of the TQQQ, which is one of the stocks of the ETFs that I have, which in this case is a CFD, that have to do swing trades, usually because it's indexed to the Nasdaq and it's a multiplier of 3, and I use this index a lot. I'm no longer going to use it because of this costs, and for you it's going to be a higher cost if you're going to copy me with €500 or €250, so each quite low, and this could be, you could get transactions of $3 each in this case. So if you want to avoid the $3 stocks shares, probably I recommend you to copy me with more than $500, because that probably will cover having stocks with higher than $3, unless you copy only with $100 or $250. I think it's the minimum now. You may incur of buying stocks with less than $3. So I do recommend you, if you want to copy with a higher value. So this is the biggest thing in terms of what we're having now. You're going to continue to receive the dividends as there's not going to be any maintenance costs unless if I buy or I sell, where before you were paying 0.09%, now we are going to pay 0.15%. Bear in mind that this is not exclusively for eToro. All other brokers are doing exactly the same thing. DeGiro is actually much more expensive than eToro. Revolut is more expensive than eToro. Actually, Revolut doesn't have ETFs and CFDs, or most of them. And there are other brokers that are higher costs than actually eToro. And I was really upset with this. And I tried to look into the others to see what were the costs that we were having. Anyway, it's less expensive. I'm not going to be sponsored here, I hope, but I'm not. So the only thing that we need to have attention now is this recurring costs that on the sell and on the buy that we're going to have. One of the things that I'm going to do is before the 12th of September, I'm going to try to sell all the TQQ and some of the CFDs and ETFs that I have, probably to reduce the costs and increase other do a shift to other stocks that pays higher dividend yields, and but that's going to incur in a higher risk. So I'm still trying to validate what's going to be the best approach, because ETFs gives you more security in terms of stability, and that's why I've been outperforming not only the SP500 but also all other popular investors that have declined a lot. My portfolio, it's more stable, doesn't go so much lower as the others, because those ETFs give me some security and some support on my portfolio. So from now on, what's going to happen regarding CFDs and ETFs is I'm going to stop probably trading them, or if I buy just once and then stick with them for a long-term investment. Usually it's what I do with the CFDs and ETFs, and I'm going to stop to do some swing trades with the TQQQ, because that may occur in costs for you and for me as well. So that's why I'm trying to avoid that. And in terms of recommendation, I do recommend you to increase the investment from 500 to 1000, and probably more if you can, of course, to avoid this kind of costs. In terms of stocks for this week, you're going to have the ticker ZIM, Integrated Shipment Services. They are in the sector of marine transportation, and they have a dividend yield of 56.65. Why I wanted to put this stock on my list just for the crack, because of the dividend yield is 56.65. I don't recommend you to invest on this stock, but it's something quite interesting just to have a look. So they pay quarterly in March, June, August, and December. They are undervalued 70%. This is really interesting. The ex-dividend date is going to be on the 25th of August, and the financial health is 6 of 6. So in terms of financial health, they are really good. The market sentiment have a buy, but the future growth is minus 72.6%. So we have a big decline here, which in the past was at 88%. And as you can see in the graph, in the past month, the stock went down quite a lot. That's why probably we are having 56.65%. One thing actually that's brought to my eye is not only the dividend yield is at 56.65%. I think just for the crack, I think we could put like 100 euros or 1,000 euros just if you can invest in that, because it's interesting. It's quite interesting. The undervalued price doesn't cover the future growth. The future growth is 72, and they're going to stop paying the dividends. I doubt that they can maintain the 56% of dividend yield. This is too high. They can't afford that. It's a really high risk, but if you want to deal with a high risk, go for it. But it's a quite interesting stock just for the gag, for the dividend yield. The only big red flag here is the future growth. It's going to be 72%. Although I did check on the graph, they're quite stable quite along of the years. But if you want to invest in this, I do recommend for you to do your own due diligence in order to understand why this future growth is 72.6% negative. See what's going to be on the news regarding this stock. So this is just for the dividend yield of being 56%, just for the gag. It could be a real interesting stock because of the undervalue of 70%, and the financial health score is quite good, but in terms of business, looks like they're not going to grow much, and this is going to result in a decline of the stock price, and also the dividend yield they may cut at any time. So you may get stuck with that stock for a long time. And one thing that I forgot to mention here in terms of financial health is the assets. They have around 4 billion, and in terms of liabilities around 2.9 billion. So they are quite good in terms of financial health, but that doesn't reflect on the future growth. So the next ticker is going to be HBI and Brands Inc. They have a dividend yield of 5.56%. They pay quarterly February, May, August, and November, and they are undervalued 67.1%. The ex-dividend date is going to be on the 23rd of August, and the financial score health, we have a 2 of 6, meaning so they fell on the short-term liabilities and on the interest coverage. In terms of assets, they have around 17 billion, and in terms of liabilities, around 57 million. So they have a really big gap here between assets and liabilities, which is quite interesting. In terms of the market sentiment, we have a buy and a future growth of a 13.70%, which is quite interesting, where the past performance was not bad at all, with negative but 0.2%. Bear in mind, this is on the sector of consumer durables, and they sell luxury goods. Therefore, the past performance wasn't quite good. So we may going to face a crisis in the upcoming months. This probably going to be a little bit down. Actually, on the graph, as you can see, they went down quite a lot in the past month. But I think they may go a little bit lower since they are in the industry sector of luxury goods. So this could be a quite interesting stock if we not facing a market stagnation in upcoming months. But we still have the war going on. There's a lot of variables still in the air that may cause this type of industry to fail. But for the indicators that we have, for the KPIs that we have, everything seems to be fine. But it's something that if you don't want to invest now, I'll probably reevaluate this stock again in November and have under my on my watch list in order to understand what's going to happen. The next ticker is going to be PSEC. It's one of the tickers that I have on my. I've had this on my portfolio. I no longer have. It's Prospect Capital Corp. It's quite an interesting stock with a dividend yield of 8.94%. It's interesting because they pay monthly, and I do like monthly payment stocks. They are undervalued only in 3.1%. They increased quite a lot in the past month. That's why the undervaluation is quite small, but still undervalued. And the ex-dividend is going to be on the August 26th. The financial health, it's 2 of 6. So they fail on the interest coverage and the debt reduction. And in terms of assets, they have around 54 billion. In terms of liabilities, around 105 billion. Million. So we have a 50 million of difference between assets and liabilities, where liabilities is much more. In terms of the past performance, we have a 35.5%. They were quite good in terms of past performance, but the future growth is with a minus 50% is going to be quite awful. So this is one of the stocks to have in your watch list. I do have this stock on my watch list for a long time, but the future growth it's still negative for a long time, and they are still undervalued. So I'm going to keep them in my watch list until they go down, because the price of the stock is going to go down. This future growth, it's one of the indicators. Last but not least, the ticker PBA. It's Pembina Pipeline Corp. It's one of the tickers that I have on my portfolio for a while. They pay monthly with a dividend yield of 5.27%, which is quite good. We do have something similar with the Exxon Mobil or Chevron. But they pay less dividend yield, and they pay quarterly, which this one has a higher dividend yield, and they pay monthly. They are undervalued in 17.3%, and the ex-dividend is going to be on the 24th of August. The financial health score, we have a 5 of 6, where they fail with the long-term liabilities, but bear in mind, in terms of assets, they have around 4 billion, and in terms of liabilities, around 3 billion. So we have still a gap of 1 billion between liabilities and assets. They have quite of a big cash flow. And we have here an indicator that it's interesting, which is the future growth is going to be 1.8%. Actually, in this area of energy and oil and gas transportation, there are not much they can grow unless they buy new haul rigs and all that in order to grow. It's an industry that is quite narrow to grow. In terms of the past performance, we have a minus 8.1%, but we still have a market sentiment of a buy. And as you can see here on the graph, they quite increase a lot in the past month. So this is one of the stocks that I have on my portfolio. I'm going to continue to have until they start to shift. And since it's monthly, I can get rid of the stock at any time. I'm not concerned in having in my portfolio to exceed a specific time of ex-dividend date in order to sell. That's why I do like the monthly stocks instead of the quarterly stocks. So in terms of the market last week, we had an overall decrease of around 2.5% to 33, as you can see here in the Nasdaq, 1.18 and 2 on the European stock exchange, except the UK stock exchange, they maintained, and the Chinese stock went down a lot, around 3%, where we saw Alibaba, etc., went down quite a lot. But this is still a good indicator. It means that we can buy Chinese stocks because they are being oversold. The opposite doesn't happen with the UK stocks. They are being oversold. So we are buying stocks that are quite expensive in the UK market. And here in the Nasdaq means that the stocks are being undersold, meaning, so for example, if you're going to buy Apple, Facebook, Meta, or any other Google, etc., that are in the Nasdaq 100, you are buying undervalued. In the overall, you need to do your due diligence again, stock by stock, to see if you are buying cheap or expensive. In terms of market sectors, we had here a big decrease in the biotechnology with 3.57%. Companies like Pfizer, GlaxoSmithKline, and BBVA, they are here in this Nasdaq biotechnology, and they went quite down. We may going to see this on the heat map. The only that this week, the only that had increased was actually the energy sector. We have here consumer staples like Amazon's, etc., and we have here the utilities, which is also correlated to the energy sector, which is utilities like water, telecom, etc. And again, we have here the semiconductors like Intel, AMD, and Nvidia, which was quite affected this week as well. So in terms of here of the heat map, we have here metadata with minus 7.11%. They went down quite a lot. We have maintaining here still Berkshire Hathaway and Amazon with minus 2.69%. And stocks like Walmart, we have still a big increase. This is quite interesting, a shift here between Walmart and Amazon. So it looks like that people are buying less virtually and buying more locally. Like you have here Costco and HDE. This is due to the fact of COVID. They are more leased. They're no longer COVID in certain regions, and this is the reflection of that. And as I mentioned, we have here AMD with minus 3.28%, Nvidia with minus 1.71%, FVGO still maintained with 0.11%, but all the Intel as well in minus 0.12%, but all the rest was quite impacted as a group, except Apple at the increase of 1%, which not great, but anyway, better than negative. So now let's have a look into the SP500 and the Bitcoin. So in terms of the SP500, we may see now here a decline for the next upcoming week. This week is going to be negative, and we have here already a shift in the market. So we're going to have a bearish week per se, and I do think we're going to repeat something that we had here, may maintain, but we're going to have a decline. We still don't have here any head and shoulders, but we may see here head and shoulders, something like this, and then probably go up. And probably we're going to reach this line. I doubt it that we're going to continue to increase so much as we've been increased in the past, like something like here. Although we had here a breakout, which is quite interesting. We revert the tendency of the market, but now this is going to be hard. If I trace something like this here, let's say we may continue to follow this trend. If this happens, it's going to be a really aggressive bull market, and I doubt that that's going to happen. People are afraid, so I think the trend is going to be a little bit more like this, or like more similar that we have here in the past. So this is going to be big. We are still trying to recover and going back to the same values that we were before. So we are trying to reach again back to the 4,500, which probably will become around December-ish, I think. But this week's going to be negative. We may see here a head and shoulders here in the next upcoming week, and then probably follow this trend. In terms of the Bitcoin, we may see the same tendency as the SP500s with a decline. Probably we reach the 20k again as a support, and probably we maintain to the rest. We still have the average is still quite low, and the indicator here, although we have a bearish mark in the next upcoming week. So as you can see here, this momentum indicator is going down, but I think we're going to have here the signal line is going to be a little bit lower, and we're going to have a cross again as we've seen in the SP500. Okay guys, I hope you enjoyed the tips for this week. Don't forget to hit the subscribe button and the like, that will help me a lot. So if you want to copy me, remember to increase your investment value in order to avoid those kind of fees, and also follow me on eToro, where I do some updates there every single day regarding stocks that may be interesting for you. Once again guys, thank you, cheers, and have a nice week.